Steve, Josh, hey, I'm under the weather, but I did get signed listing paperwork for that building across the street from Wheeler Farm. The address is 6344 South, 900 East. Berkshire's preparing the marketing. We'll probably have it on the market in a week. So I wanted us to decide if we want to buy it or not first. So I've put together a spreadsheet on the investment. Let me just share my screen with you. First of all, this is the building. It's the Claris Vision Clinic. So you probably recognize it. It's an acre of property, and it's a really, really, really nice high-end modern building. It's 6,642 square feet, all on one level. Okay, so that's the building. And then I've ran an investment analysis. Josh is pretty familiar with these. We built this custom spreadsheet that we put all of our properties into. So let me share my screen with you and let's just walk through it really quick. We'll zoom in for you. So here's the address, Class A medical office, 6642 feet. I'm making the assumption we can lease it for 32 a foot, triple net. That's the big wild card factor on this deal. Claris Vision is merging with another vision clinic. They built the building in 2014 and they're out. So they just want to sell or lease it. 32 a foot is high, but I think it can be achieved if you see how nice the building is. So if we got another tenant at 32 a foot, the rent would be $17,712 a month. I would suggest triple net so that the tenant covers all expenses, including taxes, utilities, etc. So we'd have that gross income. Purchase price is 3.25 at a 70% LTV loan. The down payment would be $975. The loan amount would be 2.275. I'm making the interest rate assumption of 4%, which might be a little low these days. Payment would be $10,861. So it would cash flow $6,850 a month, which is a debt service coverage ratio of 1.63. That's really good. It would be if we could get 32 a foot, this is a no-brainer. And I think we can. It's just the risk of this deal is buying it and not having a tenant. And if it sits vacant for a while. Now, if any of us wanted it for our use for any of our companies, and we would lease it, like Steve, if you want it for citywide, and we just lease it at market rate, well, then it's an absolute no-brainer. I think we're all in. Here's the IRR return after 10 years. So the mortgage balance at the 10-year mark would be 1.792. We will have bought it down 482,000 after 10 years. Assuming 6% annualized appreciation for a decade, we would net about 4 million on a sale after we pay off the debt at the 10-year mark. And that gives us an IRR of 8.36. So I think it's a very clean, solid deal. I think the building is off the charts nice. I'd like to schedule time to show it to you guys next week. The wild card is, can we lease it to a new tenant? So think on that, and let's schedule a time to go see it next week.